Hi viewers, welcome back to my channel. Today my video topic is after the event insurance. Do you have enough cover? Uh, Whatever the type of insurance, if there is a loss, there are two questions to consider and immediately. Firstly, do you have cover? And secondly, do you have enough cover? This is as true for after the event AT insurance as any other form of insurance, but unfortunately, many claimants have a forward approach to arranging cover. In this article, Rogo Pirozolo examines what claimants should consider to ensure they have bought enough AT insurance. The claimant once approached us when they needed to provide security for costs to the defendant, not unreasonable. The parties agreed the claimant would provide security for costs in trenches. The claimant arranged for the litigation founder to buy adverse cost cover and a deed of indemnity for the initial tranche of security for cost ordered by the court. The limit of indemnity for the adverse cost cover was the increase each time the court ordered a further tranche of security for costs to be provided. This topping up of the cover and providing further security for cost continued until the action proceed to trial. Despite the confidence in the case for the legal team, litigation founder and overseers, the defender successfully defended the action in accordance with normal practice. The court ordered the claimants to make a payment on account of cost toward the defendant's cost, with the remainder of the defendant cost to be assessed by the court if not agreed. The shortfall in the cover purchase was significant that only approximately 63% of the payment on account of cost ordered to be paid on the defender by the court was covered by the ATE policy. The impact of this underinsurance was immediate because the court order was for these costs to be paid to the defendant within 21 days. Uh, there was no cover for the balance of the defendant cost that would need to go to detailed assessment. Clearly, the litigation founder in this action saw the benefits of an adverse cost policy and an anti-avoidance endorsement deed or indemnity to provide security for cost and avoiding having to pay cash into court. This was their motivation for buying cover rather than protection. If the claimant lost the action, had they considered this possibility, they would have to bought significantly more cover. Assume the worst case scenarios. A better approach towards obtaining ATE cover is to assume the worst case scenarios, namely losing at trial, and make a realistic assessment of the exposure to pay the defendant a cost. This is prudent given the inherent risk in litigation, particularly complex commercial dispute. Caution assessment of the level of cover needed for the trail should be made. This should provide the insured claimant with significant cover should they lose at trial, as well as protection for any litigation founder involved in investigating in this case, given their exposure to a non-party cost order. Assessing the exposure of to cost of an ATE policy is not a precise science, particularly when assessing adverse cost. As a rule of thumb, using a budget of the claimant's cost. If the action proceed to trial is a useful basis to work from to assess the exposure to adverse costs. However, this would only hold true if the defendant's legal team, both solicitors and counsels, have similar hourly rates to the claimant's. Equally, the claimant budget would need to be multiplied to reflect the number of legal teams representing the defendant where there are multiple defendants. Furthermore, the limit purchase initially should be kept under regular review. This is particularly important as an action progresses to trial, so that if the limit of indemnity needs to be increased, the insurer can be approached in good time. So hopefully viewers you like this video, please like and subscribe my channel for next video. Goodbye.